Good morning. We're here to make a brief study on VLO energy. Ticker symbol is VLO. Let's start by the technical analysis. This is the long-term chart going back to 97 when the company had its IPO. Well, it had this erratic behavior here until the low in 2002, and it really started a big uptrend in late 2003 to a high of $70 in mid 2006. Then it has been trading sideways since then on this long-term chart. Let's check the short term. Well, you can see another bull trend that has just started here in March. A nice run here since this dip. This is about, let me see, 64.35 divided by about 55. This is a 17% run in just 1 month, and the stock just had this golden cross here with the 50 days moving average closing above the 200 days moving average, which is another bullish sign. So no doubt the trend is bullish now. Technical overview: VLO rose sevenfold between $10 in late 2003 and $70 in mid 2006. The short-term trend is bullish. VLO just had a golden cross. Now a bit of a fundamental analysis. This is the number of shares outstanding and the market cap since 97. You can see the share count has remained stable here until 99, rose a bit in 2000, and then a big jump in 2001. Probably this is due to some acquisition or probably that. And then it continued to grow until 617 million shares outstanding in 05. But now the company bought back some shares in 06. About I just made the calc. I believe it were 13 million shares or so, 2.15% of the number of shares outstanding. As for the market cap, it has been so the average annual share count increase has been 9.42%, and the market cap increase has been 37% on average since 97. But the big push was here in late 03 and 04 and 05. Now let's move on to the balance sheet analysis. This is the long-term debt and the current ratio. Currently the company has 4.6 billion in long-term debt, going down from 5.156 billion in 05, but the current ratio dropped to a very low level of 1.22. I like to see it above 2. So there was a balance sheet deterioration here in 06. As for revenues, it's interesting to notice that revenues were growing a lot even before the share price had its big jump. You can see here in 2002 revenues grew almost 100%, and the stock did nothing, at least on a bigger scale. Here in 2003, 38 million, 04, 55 million, 05, 82 million, and in 06, 92 billion. So I hope I was saying $billion because this is billion. And now 92 billion in 2006, expected for 07 also 92 billion, and just 88 billion expected for 08. So analysts don't expect revenues to keep growing at the same pace they were. At best they expect it to remain the same. Average annual revenue growth historical was 32%, but nothing like that expected for the future. And the industry grew 17.2% since 2005. Gross margin for VLO is 11.5%. That's the number in 2006, and 12.1% for the industry average. Price to sales ratio for VLO is 0.42 and 0.67 for the industry. So VLO looks cheaper than the industry here. And for earnings per share and net margin, The earnings per share were very erratic here until 2003. Perhaps this was really the catalyst, this 3.27 earnings per share in 04. And in 06 we had 8.64 earnings per share, expected to decline in 07 and 08, but maybe analysts are wrong in this expectation, and that's why the stock is moving up, adjusting to more recent estimates for 07. Maybe earnings won't decline, they will stay about the same. So average annual earnings per share growth 61%. I believe I've counted since 03, since this 1.27 in 03. But a big important fundamental development is this net profit margin expansion to 6% now, and the price to earnings ratio for VLO is 7.5, and for the industry average is 11.2. So again, the same picture. VLO seems a bit cheaper than the industry, probably because analysts are expecting this drop in earnings per share. But I don't know, maybe they're being too pessimistic here, and the market is also saying that. So maybe VLO will rise to meet the industry average here at an 11 times earnings multiple, which would, let me see, just if earnings stayed the same as 8.64 and the stock would trade at the industry average, it would be 11.2 times 8.64, $96.8 a share. 96.8. Okay. Fundamental overview. The share count rose 9.4% a year since 97 on average, but VLO bought back 2.15% of its shares in 2006, which is a positive development. The balance sheet in terms of current ratio is as weak as it has ever been. So maybe since they're buying back shares, it had this effect on the balance sheet, but I would have to dig further on this. Revenue grew a lot, but not much growth is expected going forward. In fact, not growth at all. Net profit margin is climbing at 6% now. Price to earnings ratio is just 7.5, and the industry average is 11. Long-term estimates. This is the most important part of this analysis. I estimate revenues will grow at a 5% average annual pace for the next 10 years. So I'm being more optimistic than the general analyst. A net profit margin will be 6%. Given this, the company will have revenues of 150 billion in 2017, a net income of 9 billion. Apply an average 11 times earnings multiple. I'm also being a bit optimistic here, considering the company will trade at the industry average valuation when this hasn't been the case, but let's move on. Apply an average 11.2 times earnings multiple and get a 100.8 billion market cap. Given these estimates, I expect VLO share price to rise an average of 10% annually over the next 10 years. So to go from a 39 billion market cap now to a 100.8 billion market cap 10 years from now, the share price needs to rise 10% a year on average. But I'm looking for at least 16%, so 10% is not enough. I believe there are better investments out there, perhaps with more risk too, but with more growth potential. So 10% not enough. On a 1 to 10 scale, I give VLO a 6 rating. Thank you. Bye.